All right, everyone, welcome back to a new YouTube video. This one's going to be a breakdown of a trade that I took Monday, November 28th. It is currently November 29th. It's a Tuesday right now. This video will likely go up in this week going into the first week of December. And yeah, I kind of wanted to break this down. I haven't made a video in quite a bit. I've been focused on the mentorship a lot, and as well as the boot camp, and as well as my studies university. So I've been quite busy, and I'm going to start posting on here a lot more. And yeah, if you're interested in a mentorship, or being under the guideline of someone who's been through all of what you're going through right now, and you're still struggling, I would highly advise you to find a mentor, even if that's not me. I'm going to be fully transparent. You either learn from your mistakes, or you learn from a mentor. And ultimately, I kind of wish I knew that. Kind of wish I had a mentor a lot sooner than I did. It took me about 2 to 3 years to become profitable, and to start consistently making the same plays every single day. And that's exactly what we do here at Samson FX. So if you're interested in something like that, if you're interested in taking the same exact trades every single day based off of the same higher time frame narrative, the same entry criteria, it's all the same. It's very systematic. And it's pretty much once you learn the system, you just click the buy and sell button without hesitating, because win, lose, or break even, you know that in the long run, you your MO, or your prop firm, or your account in general is going to be like this, right? So win, lose, or break even. System works. It's proven. I've back tested it hundreds of times, different hundreds of trades, and proving it, every so often, because there's always room for improvement, whether that's taking more R or taking less R, taking range-based supplies, which I do now, instead of just pinpointing a little candle like this that you don't never get tapped into and the price runs away without. But instead, pulling the range where, you can actually get involved in this move and take part in this move, instead of just pulling your order blocks like this, right? You don't get involved. However, if you took the whole range, you would have gotten involved here, right? So that's kind of what we do. And same thing goes for here. This is your supply. Sure, it tapped in over here, but there was an opportunity for you to get in on the range, right? On this range, right in here. Okay, as soon as we tapped back in, and you would have taken this move, right, and been in shorts for a few days. So it's little things like that that we continue to improve upon and implement into the system to get us into more trades, to make us more money. And yeah, passing prop firm challenges. The results and the feedback has been absolutely phenomenal. And if you're into mentorship, you guys know about all this kind of stuff. So you don't really need to watch this video. We do weekly Zoom calls every week. It's a whole bunch of good stuff. And the goal is to get you funded. And if you're not funded within 12 months, you're free to be under my mentorship for the rest of your life. And that hasn't, that won't happen as long as you put in some of the work. So getting into this breakdown, I'm sorry for that little rant, but I just wanted to let you guys know I'm here to help anyone and everyone. But yeah, let's get into this. So coming into Monday, which is over here, we'll go ahead and replay this market. Actually, yeah, we'll go ahead and replay it here. All right. So if we take a look at this, and we're looking at structure, which is what we always do, this is how we start from top down. This was our daily break of structure. Okay. So once we break structure to the upside, we're going to continue buying until further notice. And until further notice, I mean until we get then order flow realignment on a lower time frame. Okay. So let's hop into the 1 hour and check that out. All right, so if you take a look over here, we're inside a whole entire daily supply, which you just saw that I had pulled the daily range supply. We already tapped into it once, a little bit back, and this high made a new low, which to me means that, okay, maybe, once we tap back in again, it'll hold, or at least for days it'll hold, because it's a strong POI. It's a high probability POI. It put in a new low. And that goes for any time frame. All this stuff goes for any time frame. So once we kind of get our order flow realignment, We can take a look at this from a supply and demand standpoint, right? This was the last demand that was supposed to put in a new high. So this guy's job is to create a new high. It didn't do that, and supply took control. Okay, so that to me is order flow realignment, or formerly known on this channel as change of character. But there's a lot of shit around the word change of character, and I choose not to associate with that term anymore because there's a lot of people who use it, and they're giving the wrong. They're not doing the word justice. Let's just say that. Yeah, this is a crucial part of the system. It's important to know how to mark your order flow realignment because that's going to give you the bias. And ever since this 1 hour offer, we've been selling, right, for days. And we've been looking for these moves for days. We've been catching these moves. Right? We continue to sell off. Sure. We come down here, we have a day where we're buying. Maybe this would have been a day where we just kind of sat on our hands or took a -1, whatever that may be, ended up break even. But nonetheless, this high up here was never invalidated by candle body close. Okay. So I'm going to go ahead and play this market. And all right, I'm just going to skip to right about here. Okay. So again, this high to me was not invalidated. This offer still holds. Although this was wicked, it wasn't candle body closed above. So to me, I'm still short on the euro. Okay. Like I said, if this high, gets taken and we have a candle body close, then I'm going to wait for another order flow realignment, which is going to look something like this, mark this offer, and then we'll be selling for the next few days, playing that daily pullback. Before I go down to the 15-minute, I just want to mention something. We know that after a break of structure on the daily time frame, which happened here, there's going to be a pullback at some point, okay? And you want to be able to play both sides of the market. These moves, these impulsive moves, happen very fast. They happen very fast. Majority of my trades are taken off of the pullbacks, okay? We create a low. This move happens fast, and then we correctively pull back. We correctively pull back. We correctively pull back, right? So you can kind of see that on the charts. These corrective moves, even though, you're buying here and trend is overall bearish, they're corrective moves, and the system allows you to get into these as well as the impulsive ones too, okay? So I just want to make that very clear. After structure, we're expecting a pullback at some point. We're buying up until that 1 hour offer, okay? So we'll go down to the 15. We'll keep our structure indicator on because that's ultimately kind of what we use. This is our trading time frame on the 15-minute. And right now, coming into this morning, I wake up at 8. I come to the charts at 8 a.m. Eastern Standard Time. My sessions from anywhere from 8 to 11:30 Eastern Standard Time. Sometimes it runs till noon. I prefer not to trade at noon, but I only trade New York since I am on the East Coast. Okay, so coming in this day, yeah, we are bearish in 15-minute structure. However, I understand that from a daily standpoint, or from a higher time frame point of view, that we're actually bearish and we're trying to play this pullback down into this range or somewhere down into this range, right below the break of structure, which we can find, a daily POI, which would be something like this, right? Okay, so I know that we're trying to play this pullback down into, here. And yeah, anything could happen. I'm not predicting the market. I just we follow expectational order flow. And this is what works for us. May not work for everyone, but pretty fucking easy to learn. So again, if you're interested in learning this stuff, join the mentorship. Just join it. I'm telling you, you cannot go wrong unless you just choose not to back test a little bit and put in the work yourself and show up every day and stick to your rules. Okay. So again, coming into this day, we are, I wonder why I can't just go back again. Coming into this day, we're making higher highs and higher lows in the 15-minute. Now here's what I kind of pay attention to. Again, I'm expecting sells. Okay. So what I have here is a range-based supply. And price is going to likely tap into here and drop a little bit lower. Okay, here's another prime example of why pulling range-based supplies are super effective. What you probably do and what I did for a long time was just pull this candle. Happen in there? No, we do not. Okay, so if you just pulled this candle, you would have missed out on this move. Okay, but if you pull, you would have been in this move. Okay, so that's just those minimal differences like that allow us to get in the market and to pull more money out of this thing, right? So let's go ahead. We'll keep going forward. There we go. Here we have our breaker structure. Okay? Now, what I want you to keep in mind is we have a new supply. Okay, again, not pulling this little candle, pulling the range. Okay, so from this low to this high. Yes, the breaker structure did happen here. However, you could also label this as your breaker structure. Okay, so this is your internal structure. Doesn't really matter. Then you would have pulled the same exact POI. And what happens with this kind of thing, technically, right? Technically, this is your whole entire supply. Okay, this is the whole range supply. This is everything, every up move structure wise that took place before you actually broke structure. That is the range. So when you have a big range like this and price comes down and makes one leg and then makes another leg, okay? So you have price comes up, price comes down, price comes up, price comes down, price makes a leg, price comes down, price makes a leg, price comes down, and you get the point, right? Price makes a leg, price comes down. What I'm pulling is I am refining down to this supply. Okay, I'm refining down to the last push, their last push as a range before the active structure. Okay, so I hope that makes sense. I hope that's clear. Yeah, what you're gonna do is pull the range supply, which would be right here. And we're gonna simply wait for, well, we kind of tapped back in right here, so I'll replay that. No, far back to right here. Okay, and we'll play price. There we go. We get our breakup structure. And what we're going to do is wait for price to come back up on the 1 minute or the 15-second. I prefer the 15-second. You can still use the 1 minute. You don't need the seconds time frame. You're just going to get a lot better entry sometimes with the 15-second. Okay. And so what we're going to do is we're going to wait for price to tap in. Okay. There's no forcing trades around here. We definitely don't do that. So we're going to keep playing. We still haven't had our lower time frame offer quite yet. And that to me is order flow realignment. Okay, so here is the last sort of demand that put in the high. Once that goes, what I'm doing is pulling the fib. Okay, let me bar back. Okay, and what I do is I pull the fib from the high to the low, and anything that comes back into this area into premium is go time for me to start looking for candlestick confirmations and to execute. Okay, we'll go ahead, play price, pulling back. We tap in. We did tap in. Okay, this wasn't the trade that I took, but this was how I would have entered perfectly from an offer standpoint. And let me go ahead and mark that real quick. This was your 15-second offer. Okay, so it's at this point where I would have market executed at 9:37 in the morning, and my position would have looked something like this. Okay, I would have covered the high 3.1 plus some spread. We'll give it some room, take us to 4.1. And I would definitely be going break even at this low at the very least. So we'll keep that in mind. Again, this is not the trade that I took. I'm going to show you how I got in on a continuation. Again, which is, there's options here. If you miss the first order flow realignment, there's options here to get in on, or, scale in if you took this trade, but also if you missed it, you have an opportunity to get in the market. So let's just continue to play price. And yeah, let's play price. Okay, so here is our first break of structure, kind of to the downside, right? We have this little candle. That to me classifies as a break of structure, an internal break. And what I would have done was pulled this range, right? I would have pulled the range and I would look for candlestick confirmations in here. We didn't tap in, but we do have another break of structure. Okay, so this is your second break of structure. The further you get down in the leg, the less likely you are to take someone out of this trade. So after 3 breaks of structure to the downside, if you miss the original entry, I would likely stay out of it. You're likely just going to become liquidity. And by the time price kind of gets down here with a third leg or a third break of structure, it will come back up sometimes. And if you get in down here, that means your break even is here, and you'll get stopped out. Whereas if you get in up here or up here, you might not get stopped out. There's a chance of you losing a trade. Okay, so we'll go ahead and mark this break of structure, not offer. Okay, and what do? We pull the next range. So this is the next sort of supply that we had before the break of structure. And if I remember correctly, this is the trade that I took. Okay, so what I'm looking for is candlestick confirmation. And I executed right here. So as soon as this wick tapped in and I got this little engulfment, I executed actually before this candle. I did not mean to play that. If you could have executed on the next candle as well, depending on what your entry looked like. But this is exactly where I executed at 9:39 and 45 seconds. And what I did was I just covered the stop plus some spread. I might have even covered up here. I don't totally remember, but we'll see. I think I may have covered this. Yeah, it was. I covered the whole range plus some spread. So 5.1, that brings us to like 6.1. Give it some room depending on your broker. And yeah, this is where we start to target, the higher time frame. So let's go to the 15-minute. And this is how it's going to run, at least down to this area. This is the next area where price can be reactive. It's very unlikely that we're going to do anything in here into this imbalance and take off, especially because higher time frame says we're what? Bearish. Okay, so this is where, this is the demand where I kind of, I believe I just took the full 7R, yeah. I didn't even partial out on this one. So this is my demand. And this was my target. And by the time it got down here, it was like 12. So that kind of trading day for me. But yeah, we'll zoom in here. It would go break even first trade here. Okay. And we'll continue to play price. You get another little pullback. Okay, I remember this. Price played around a little bit before it actually dropped down. I wouldn't have gone break even yet. I would have just used my R to go break even at like 4R. I think I went break even because there's no low on the left side of the screen to take on the 1 minute. So you kind of gotta use your judgment. And if there's nothing on the left side of the screen, there's no data over here or over here. Like for example, this first trade would have been break even at the nearest 1 minute low. If there's no data on the left side of the screen, you got to use the numbers. At least that's the rule that I kind of live by, and it's worked out for me. So whatever, it might not work for other people, but that's what I found to be useful and helpful. And yeah, we'll go ahead and just go to the 1 minute, and we'll continue to play this out because we don't need to sit around. This whole case study was also posted in my Telegram, so we'll go ahead and just play it. All right. I believe we wound up going way past this demand. Super pissed off I didn't hold this. So that's unfortunate, but it wound up being around like 15R. towards the end of the day. So, whatever. And price just kind of continued to blow through that POI and wound up running like 15R. And then it turned around at some point down here. Yeah, I took 7R. I'm not going to sit here. I'm going to be fully transparent with you. I don't get in and out of the market at the most specific points. It's always important to protect your capital and to take partials. However, I didn't feel like a partial was needed on this one because, again, we had room to go. And yeah, so that was my trade on Monday, November 28th. If you're interested in this kind of stuff and interested in trading like this and trading full time potentially, join the mentorship. The link is in the description. And we'll help you reach your goals. Okay. So yeah, that's really it. Thanks for coming by, guys. I appreciate it. Any kind of support, like, comment, any questions you have, I'll get back to you as soon as I can. And I'll see you guys in the next one.